how's that retirement planning coming along? I'll show you how one investment property will help you achieve financial freedom. Yes, one, not 10. How much do you really need to retire? Let's take a look. Assume you will need retirement funds to last 25 years. At $6,000 per month with 2% annual inflation, you will need a total of $2.2 million. Now, let's take a look at your RSPs. If you contribute $24,000 per year or $2,000 a month for the next 25 years at 5% net return, after inflation and fees, your portfolio will be valued at $1.12 million, which leaves a shortfall of $1.08 million from that $2.2 million goal. Oh yeah, I don't know how many people have an extra $2,000 of after-tax dollars to contribute on a monthly basis for the next 25 years. Now, for Canada Pension Plan or Old Age Security, don't even think about it. Who knows where that will be with so many baby boomers retiring right now. I am a firm believer in being in control of your own destiny and not relying on the government to help out. Okay, here's the example of buying a duplex in the city of Toronto. So I picked something in the St. Clair West area. So this is Dufferin and St. Clair, the north side of St. Clair, access to TTC, which is the streetcar, as well as the buses that go up and down on Dufferin. So connecting St. Clair to Dufferin to Eglinton, which has another LRT. So it's accessible via transit and in the city of Toronto. This house, or this duplex I should say, is listed for $1.129. In this case, it's been on the market for 10 days, hasn't sold. And I'll use the numbers from here to do the analysis for this specific investment. And I have highlighted some key points here. You got $4,031 for property taxes. It's a 3+1 bedroom, so you have 3 bedrooms on the main and upper unit, and then 1 bedroom in the basement, which is a separate unit. Then there are 3 washrooms, one on the second floor, powder on the main floor, and then you got another bathroom downstairs for the basement apartment. So if we move over to the analysis, if you look here, a couple things I'm going to take a look at is the cash flow as well as capital. So up on top, you'll see the address of the property, 1.129, and then I put a projected price. I just use 1.1. Probably you can go for less since it's been sitting on the market. But anyways, it's at 1.1 assumption for a purchase price somewhere in that range. With respect to capital requirement up front, so you have the 2 land transfer taxes to the city as well as the province. You have your legal fees, appraisal fee, title insurance, and that puts you at, with the 25% down payment, at $314,000. So $275 is the down payment based on 25% down, plus your closing costs puts you at $314,000. Just call it $315,000 as a down payment. Now, you might say, I don't have $315,000, which I do get it. Another way to do this is the real estate ladder. So you start with a condo at $650. So you have, half of the capital requirement. You built that equity over 5 years, 6 years, 7 years, somewhere there, could be less. And then you can refinance it when the mortgage comes up for renewal, pull equity, and you buy the second property. So yes, you don't have to buy a duplex up front, because I do realize, not many people have access to $315,000. So you can do this in steps. Just work your way up through the real estate investment ladder. So that would be the other option. Now in this case, I put the rent at 3 bedrooms, $3,500 plus utilities. So the tenants would pay heat and hydro, and then downstairs basement at $1,450. And then I use 5% interest rate. So again, at the time of recording, you can change those interest rates. If you go to shorter term, probably a little bit cheaper. If you go variable, it's a little bit cheaper. Right now, the interest rates are higher than they were about 1.5 to 2 years ago. So one option is to look at a shorter term. So go 2 years and then wait for the economy to adjust. We're decreasing interest rate environment, and then you can restructure the financing in your favor with respect to a cash flow position. So again, this number could be play around. And then at the end of the month, you're negative $165, $164 that you got to contribute to this investment. Now, here's the beauty of real estate. It's long-term, being patient. It's planting a tree, watering it, letting it grow. You're going to reap the rewards down the line. In this case, I use 5% appreciation. Yes, it does change. You're gonna have stronger years, slower years, but generally Toronto real estate, the city of Toronto, 68% over the long term is achievable. I'm using 5 here. You can see that after 7 years, you'll be up from 1.1 to 1.5, let's just call it 5.5. Now, again, let's be very safe. Let's say you own this thing for 25 years, 30 years, somewhere there, and it does not appreciate after 7 years, which is not gonna happen. I mean, if you look at the population growth, immigration, newcomers, jobs, there's a lot of good things for Toronto's real estate, but let's just be safe. Let's say you have a 1.55 investment property after 25 years paid off, right? That does not appreciate after 7 years, which again, I'm being ultra conservative in the analysis. I mean, this is the difference that I'm talking about of retirement, right? You're gonna have 1.55 to your portfolio. I realize you gotta pay capital gains tax, but you'll pay that when you retire or when you're in a lower income tax bracket. But you're gonna have this 1.55 asset that you can sell, that you can keep for cash flow. It'll give you options, but it'll put you in a very strong financial position as you enter the retirement years, and it'll give you different venues to put your capital to work, whether it's a second home down in Florida or money for the kids or whatever the case may be. But you're gonna have a lot of options when it comes to retirement or when you're getting close to retirement. You can see from the duplex example, having one paid off investment property more than covers the shortfall of 1.08 million. You can sell the property, you can keep the property and live off the cash flow. It presents you with options and peace of mind in the future. When I first started investing in real estate, I thought I needed 10 investment properties. With time and expertise, I realized having 2 in Toronto will achieve that goal. But now, in today's economy, 1 investment property will do the trick. If you have 2 investment properties in the city of Toronto, you would be way ahead. You can keep one for your retirement, and the other, you can split the proceeds for the kids' university fund, or down payment on the kids' first home, or keep a portion for your retirement. You'll have a lot of different options. Adding investment real estate to your portfolio creates generational wealth. It does not have to be one or the other. You can invest in the stock market and real estate. If you're thinking of investing in real estate, reach out. I've been at it since 2006. And if you've enjoyed this video, check out why Toronto house prices will always go up. And until next time, happy investing.